Esther Oyana is joining me now. She's a currency market analyst from Apari, Nigeria. Apari, Nigeria is a certified trading partner of Apari, New Zealand, and they offer services in trading education on the world currency market. Thank you, Esther. Good morning. Thank you so much for joining us.
Good morning, Esther.
Now, of course, this morning we're looking at fundamental analysis as a market trend forecast too. But before we go into the nitty-gritty of that, let's quickly look at the market outlook, what the markets were like last week, and of course what we're seeing this morning, especially the effect of President Obama's speech on Friday, which apparently failed to lift sentiments at the market.
Well, generally, if you look at the market last week, we had a whole low for the Eurozone, especially the Eurozone. The Eurozone had a negative effect on the market. Okay. And the speech actually gave a little boost to the US currency, because if you look at other currencies now, across the board, USD across the board is on the bearish trend. Right, the speech really gave just like a little boost. People are now waiting for his action plan right now. What's going to be his action plan? Because fine, he's given his plan. They need a concrete plan. Where's the funds coming in from? How is he going to implement this plan? So this week we're looking at everybody's also waiting to see what's going to happen this week on the US market.
So is there what do you think are investors hoping, or are we going to see Republicans agreeing to this bill, passing it? Is that what is sentiments like? Investors hoping or hopeful that the Republicans will pass the jobs bill from President Obama?
Well, the sentiment is still, people are hoping, because when you're looking at the currency market, everybody's about making profit from the market. Okay. So for the investors, they're just waiting to see what if he's going to bring out a good action plan that would give them boost the Americans' image of back. If he's going to vote for the bill, if it's something that they're not okay with, it's going to go off.
Okay, so it could go either way this week. It's 50-50 and everybody we're just keeping our fingers crossed.
Everybody's keeping their fingers crossed. If you even see the market journey, that's what's happening. Everybody's just waiting for what's going to happen this week on the US market to determine, okay, what direction is the market going to go, bullish or bearish.
Okay, now last week we looked at the technical analysis as a trend, market trend focus tool, but today we're looking at another market focus tool, fundamental. Could you just throw more light on that? What is it about?
The fundamental analysis is the use of economic factors, the use of economic news to analyze the currency market. When we're talking about economic factors, we're talking about news. Example like the Eurozone, where they're having their debt issue crisis, okay? Use of those analysis, government policies, okay? They have something known as the social calendar, the economic calendar. Economic calendar shows you the data, just like you had the German report for their
German manufacturing, exports,
balance of trade report. And in the Eurozone, Germany is the largest market. So anything happening to the euro, to the German economy is going to affect the euro generally, plus the Greece debt crisis. So that is what is giving the euro a very negative outlook since now, for 3 weeks running now, euro is now. So when you're talking about fundamental analysis, you're making use of this economic data, okay, from economic data from the various countries, like the US we're talking about too, that they also make use of that. That is what investors use to trade the currency market. The outcome of these results will determine, is the market going to be on a bearish trend or is the market going to be on a bullish trend.
Okay, so basically when we have an economic data out from either of the zones, like you mentioned, Germany, if we have a data out from Germany, investors will, how the investors react is also going to be a reflection. Yeah. We'll see a reflection at the market, so that is what you are referring to.
If you look at the data, most of the times you have the actual and the forecast report. Okay. So the actual result is what investors use. The actual data that comes out is what investors use to determine what direction the market is going to go to. Apart from this data, also natural disasters too are part of it, because when you're dealing with the fundamental analysis, you're dealing with everything happening within that country. But all the events, all the happenings in that country affects the country positively or negatively, at the same time also affecting the currency. So for like, if you remember, we had the first earthquake was in New Zealand, right? I remember very vividly, 11 p.m. Nigerian time till the end of the day, New Zealand dollar was falling badly because of that earthquake. Same thing with the Japanese yen, but funny enough, the Japanese yen wasn't falling, because as at then we had traders already taking a buy position. The banks have already taken a buy position on the yen, and they were not willing to lose their money, so they still held on to that their position.
I know the yen is generally or traditionally known as a safe haven asset. Yes. So even in times of turbulence or turmoil, investors still hold on to the yen.
Yes, they still run to it.
Okay, now speaking about data, you mentioned that when the data comes out or when the market is expecting certain data, there's a real data, then there's a forecast.
Okay.
Does the market price in the forecast, which is usually most times is usually positive? Does the market price in the forecast first ahead of when the real data comes out?
Really, it's actually the forecast comes out first. Okay. Forecast is always there. The forecasts are being made or being analyzed by economists. Most of them professionals, some of them we have businessmen also having the analysts forecast on any of this economic data. Then the real result is what had been collated over time that we should, whether if there is a disparity between the forecast and the actual result.
Okay. Okay, so it's how the investors basically react to this news. If it's positive, the markets move up. If it's currencies, let's restrict ourselves to currencies. Okay. So where can a trader get his hands, find this fundamental news?
We have general websites for this news, okay? One of which is, we've heard of Bloomberg. It's actually owned by the Mayor of New York. We have Reuters. We have CNBC, okay? Online, if it's on your DSTV, you have your CNBC Africa. There's so many news websites where you get all this general news and information from. Okay, so basically as a trader, if I'm a trader, I would just wake up in the morning, open my laptop, and I want to trade. I'm looking for direction for the day and the best places to at least maximize my profit. So I just go to this website, I click on, look at what the economic data is or what the news is for that day, and of course that will provide direction for me, basically. Yeah, we do that. Also, in addition, our Pari has their own fundamental news analysis on our website, where we have our Forex and CFD analytics, where you have all the economic data you need. You have the economic calendar. You also have the Dow Jones Newswire. At the same time, you also have the market news, where a real-time news is running up for you to watch to know what's happening to the market. So
that is part of the services that Alpari offers. Yes, so instead of going to, as a trader, instead of going to get like raw data, I could just go to Alpari's website, and all the data has been put there neatly. Yeah. Data that I should know that concerns me directly as a trader.
Yes.
Okay, that's good. So, does a person need to have a background in economics? Because some people, you go up to certain website, business, finance website, and you see all this data. They're talking about PMI. They're talking about all kinds of technical wordings. How does a trader who doesn't have a background, how would he cope with that, or be able to discern or disseminate that kind of information?
Having a knowledge of economics is an added advantage, but you're not going to, it's not really so compulsory. You should study economics as a course. And if you look at economics as a course, it's something simple and easy in the sense that it's something we do in an everyday life, okay? For example, we are told about a product or a service that this product is so good, so interesting. You have this market sentiment, everybody will rush to buy it. And when it is not, you notice people won't buy the product. So when you're coming to economic data, like you said, the PMI news, you have the trade export, you know that in a simple economic terms, okay, if export is more than imports, okay, it's a positive balance of trade. Something is an easy thing. Interestingly, also this website, when you're talking about fundamental analysis, you have analysts break them down to simple terms for even any ordinary person to understand how it works and interpret it. But adding to the fact that having educating yourself with these economic data, economic reports is necessary, because you must understand how to apply this.